Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, August 8th, and we are taking a full tour of the tech sector today, folks. We have got some earnings to debrief in the grocery, delivery, and social media sectors. We are also hearing about some early reviews about OpenAI's GPT-5. We're then going to get into fintech and talk with the chief business officer of Brex. And we're also going to get into health tech with the CEO of Maven. And finally, we've got a feature story about Jensen Huang's kids. That is from our weekend magazine, and that promises to be a fun one. Before we get started, I want to alert you about another Meta acquisition that the Information was first to report last night. Meta has bought Waveforms AI, a startup that uses AI not only to understand emotion from voices, but it can also mimic emotions using AI-generated audio clips. Now, you might recall Meta just bought another voice AI company called Play AI. We actually had one of Play AI's investors, Christine Tsai from 500 Global, on the show. It seems like voice is going to be an increasingly important part of Mark Zuckerberg's personal superintelligence ambitions. And so I'm quite curious to see what other deals he gets done. We, of course, know that OpenAI debuted some new voice features itself yesterday at the big GPT-5 event. And so without further ado, let's get into that. OpenAI made quite the splash yesterday with its launch of GPT-5. There was a big fancy keynote. Sam Altman clearly took some notes from his new friend Jony Ive about how to launch a product kind of in a similar way, the way that Apple does with its iPhones. But AI models aren't as easy to evaluate and rank as iPhones are. And so today, I want to bring on a panel of people who are very familiar with GPT-5 to help us make sense of yesterday's launch and understand whether OpenAI lived up to its own hype. Stephanie Palazzolo is our AI reporter at The Information. Matt Shumer is the CEO of AI personal assistant company Otherside AI. And Siqi Chen is the CEO of AI financial analysis company Runway. And a quick note before we get started, Siqi is a small investor in OpenAI rival Anthropic through an SPV. Just wanted to get that out of the way. It's so great to have you all here. I want to get right into it. Stephanie, let's start with you. Why was GPT-5 such a big deal yesterday? Well, this was huge.
Definitely. I think GPT-5 has been a long time in the making. People have been, looking forward to this model for quite a while. The last time that OpenAI really released a new flagship model was, probably last May with GPT 4.0. And then earlier this year in February, they released GPT 4.5, which actually didn't go over quite well. And so I think this is just a situation where hype has been building for a long time. Another reason why it was so important is because this is the first time that OpenAI has actually combined its traditional GPT LLMs with its reasoning O series models. And so this has been something that Sam Altman has been talking about, wanting to do for quite a while in order to make the, experience of using ChatGPT much easier for consumers so they're not having to decide between so many different models. So yes, I think a lot of excitement and hype for sure leading up to this launch.
Matt, you had early access to GPT-5?
Correct.
And so you've been playing it for a couple of weeks. What do you think of it?
I do think it's an amazing model, but there are caveats. Right. So the first thing is, and you have to think about this when you think about this release, it's not like previous OpenAI releases when we're talking about going from GPT-3 to GPT-4, right? When that happened, in that era, OpenAI was the only game in town. And what that meant was that when you looked at the difference between those two models and those two releases, the difference was dramatic. But for the first time now with two major model releases from OpenAI, right, GPT-4 to GPT-5, we've seen tons of models in between from OpenAI and from others. We've seen GPT 4.1, we've seen GPT 4.0, GPT 4 Turbo, Claude Sonnet, right, Gemini. We've got to see sort of the incremental improvements. So I think a lot of people are feeling like this isn't a crazy jump from what they're seeing because they've seen the incremental jumps. But look at the actual models from GPT 4 to now GPT-5, it's night and day. You can't go back. So it's an interesting release. I think it lived up to the hype, but I think the hype was a bit weird for this one because you have to take it into account. I do think it's an amazing model. I had an incredible experience with it, but there are points where it's weak. For example, OpenAI talks a lot about its creative writing abilities. I did not find that to be a strong point at all. In fact, I found it to be quite weak. I still much prefer GPT 4.5. Creative, but on things that involve a lot of math, a lot of code, this model is a huge step up. It's allowing me to do things that other models just can't touch.
Siqi, you've been using it since yesterday, since the launch. What have you been using it for just in your early test?
Yeah. So two things. So I forgot to mention I'm actually the creator of the #1 education GPT in the ChatGPT store called Universal Primer. So I've been testing it on that. And I think for that purpose, it feels like a small downgrade. And the reason is it is much more easy to read. It feels a lot more approachable, but amount of detail it goes into out of the box for the prompt that exists that I have without additional fine tuning, is substantially less. And that's somewhat surprising to me.
What do you mean by the amount of detail that goes into? What do you mean by that?
So what Universal Primer does is it tries to explain any difficult topic, like you want to learn about gauge theory or quantum mechanics or how a transformer works, and it tries to do so with really easy to understand analogies. And it prompts I prompt LLM to go into as much technical detail as possible. The amount of technical detail it goes into by default, and the understandability of these analogies seems like a meaningful step down from the answers I got before.
Right.
I can probably get it to do something better if I retune it. So I haven't adjusted a prompt.
Right.
From what Matt mentioned to me is that it's not going to always be better out of the box, but it does respond to fine tuning, or fine tuning to prompt. What I will say this morning is that I got a note from our team and said with their experience with GPT-5 and Cursor is a meaningful step up.
Matt, I want to talk about this idea of benchmarking. I mean, you've got all these websites. LM Arena is probably the most popular one, right? Where everyone is just so into this idea. We need to compare which one is better. We need to benchmark things. I mean, how do you actually benchmark these models? How do you quantitatively compare which one is better?
For the most part, I think we're past benchmarks, or at least we need way better benchmarks. I tend not to look at them for new model releases. You'll notice in my commentary on the announcement yesterday, I didn't mention benchmarks at all, which is different from previous models. But we're really at this point where it's so hard to tell from benchmarks. You have to use the models. You have to try them for your use cases. What I find works for me, for my use cases, might be different for somebody else, right? It might be so great for the things I want to do with AI, and it might be terrible for the things somebody else does. So I think we're entering this era where you just have to use it. I mean, that's always been the case, but you can kind of get a sense of the progress with these benchmarks. We're past that.
So the leaderboards are kind of, I mean, they're just really we're down to subjective use now. That's the main opinion that matters.
Yes, right. The model is a step up, for example, in pretty much every coding benchmark I've seen, if I'm not mistaken. But it doesn't seem like that big of a step up. But when I actually use it in practice for coding, this model is a dramatic leap even over things like Claude Opus 4 or 4.1. It's been able to touch tasks that previously, like, I wouldn't be able to do with the help of Opus over the course of, let's say, a month, that it's been able to do them in like a day. So yeah, it's really hard to see in the numbers. You have to use it. But I can't say that my experience is going to be the same one that everybody else has. You have to try it because everyone's use cases and everyone's style of prompting are different. And this model takes a lot of fine tuning on the prompting side.
Stephanie, I mean, coding tools have been all the rage lately. You know, there's what's raising a ton of money in the AI space. How much of a focus was the coding capabilities of this model for OpenAI?
I mean, it seems from our, reporting that we've done that it was a huge focus. I think up until this point, that's been an area that they've maybe fallen a little behind on in terms of Anthropic has really had the models that are being used in all the coding assistants. And so we know that in the process of developing GPT-5, that was a huge focus for them. And I do think that, there's a focus on not only being able to do more practical everyday coding tasks, but even as we saw in the demo yesterday, there was a focus on GPT-5 kind of understanding the aesthetics and design of apps and websites better, so that even if you give it a, more simple prompt, it'll know how to lay out like a website in a certain way to make it aesthetically pleasing, or what colors or, button designs to use. And I think in that way, it's also making it more approachable and easier to use for non-technical users who might want to use, ChatGPT to help design like a personal website or like an app to, make flashcards to help study with.
Siqi, we just heard from Matt about how the leaderboards, might be becoming less relevant. I mean, from my view, it feels like the reason that it's less relevant to sort of focus on how good any one model is because the reality is 6 weeks from now, there'll be another model from another company that inevitably does something better. I mean, are we past the point of really caring what any one model can do? Does it really even matter that these new releases are happening?
I think it matters. I mean, the evaluations are getting saturated, but as we saturate them, new eval sets are coming out, and so I don't think it's quite the case that these rankings don't matter anymore. I think my read on this is that if you read the GPT-5 system card, the mini models that make up GPT are all successors of existing models. And most of these models really came out in the last 6 months. And so my usage of it, it feels like, and the way GPT-5 works is it's routing to these mini models that are successors of the last generation of models. And it doesn't feel like fundamentally a new set of models. It feels like a very well fine-tuned set of models for coding and for approachability. And so my feeling on this is that this is designed to make ChatGPT feel better. And from a pricing and coding standpoint, is designed to be a direct, strategic, competitive move against the coding business of Anthropic. And so my expectation coming in was not that GPT-5 was going to be substantially better. Because I think Sam, about 6 months ago, at some point they said, we're going to shift strategies and make GPT-5 a merge of all these models. And I'm expecting probably for the end of the year an actual pretty large leap in capabilities from OpenAI.
Right.
I wasn't expecting that from this.
Matt, what are your thoughts on that? Because, we already have Elon Musk tweeting saying, look, Grok 5's going to be out before the end of the year. I mean, again, every 6 weeks we get a new model. Should we really be making that much fanfare about the latest model to come up from one company?
I mean, I think it's just natural. It's how, X works. It's how the community works. Everyone gets excited. We're all nerds and we all love seeing these updates and the progress, right? And it is, I mean, objectively very exciting. On a model by model basis, like, look, are the improvements going to be dramatic? Probably not. But they are going to be there, and over time, they're going to compound and add up, right? When we test new models at Hyperwrite, right? For example, in our main writing product, the models of 2 years ago could do the tasks we needed. But if you actually look at conversion rates and retention rates, every time we increase the model's capability or the product's capability by adding a model with more capability, usage goes up, retention goes up, churn goes down, conversion rate goes up. So even though, right, these feel like little jumps, you actually see a lot of effect over time. So I think it's important that we keep seeing bits of progress here and there. Obviously, there's going to be more fanfare than maybe there should be for each model, but that's just how things are.
Stephanie, last question for you before we go. What are you watching for from here? What questions did yesterday's announcement actually raise for you going forward?
Yeah, I mean, I think one question I have is, as Siqi mentioned earlier, this is a different type of model where it's kind of a merge of a bunch of different models under the hood. So there's probably some element of routing between, reasoning models and traditional LLMs. I think a question I have coming out of this is, with each additional model, since it'll be harder for us to tell where the improvements are really coming from, if it's coming from, improvements in the reasoning model from post-training, or if it's coming from, better pre-training methods in the traditional LLM. I think it'll just be harder for us to kind of understand where the trajectory of AI development is going and where are the most promising places for these improvements. Like, will it be from reasoning? Will it be from pre-training? And so I think that's a question that I have moving forward. Another question that I have is just, as mentioned, like the benchmarks and the evals can only show you so much, but just like, how does this work in practice with actual engineers? I think one chart that really stood out to me from the safety card is this evaluation that OpenAI does, where they're trying to see how much of like a typical engineer's work the model can automate. And so actually, if you look at O3 versus GPT-5, the eval that they did, I think it had like 44% versus 45%.
Hmm.
So I think that really stood out because you see all these really impressive
Right.
results on coding evals, but then you see this very practical evaluation of like, okay, how much of just like an everyday OpenAI engineer's work can the model do? And it's
Right,
only
right.
getting better by 1%. So I think that was really interesting, and it's just one data point, but I'm curious to see how the model performs on these more like practical evals in the future.
Well, look, I'll tell you what, like we said, I mean, these models are coming out so fast and so quickly. The three of you are very great at explaining it to us. And the benefit is that you actually use these models, Siqi and Matt. So thank you for coming on the show. We appreciate it. We will have you on again the next time we have a model to unpack. That is Siqi, Matt, and Stephanie. Before we get to our next guest, we do have some earnings to recap. Instacart reported earnings last night, and the one number that you need to know is 11%, which was the revenue growth rate. And yes, it was an acceleration from the last quarter, and yes, shares were up today. But really, the reason you need to know 11% is because it's less than half the growth rates of DoorDash and Uber Eats. And so really, I mean, this company, from my view, has to find a way to catch up. We should say that Fiji Simo, of course, is leaving for OpenAI. And so this is very much a transition moment for the company that I'm excited to see how it plays out. Pinterest also reported last night. The most important number from that print was 17%. That was the top line growth rate. And the company is forecasting it'll stay the same for the year. Now, the stock was down this morning. I really think it's because other advertising businesses like Meta have shown their top line is accelerating. It's growing much faster. Pinterest is kind of steady. And so this is all competition at the end of the day. And finally, Chime reported earnings for the first time as a public company. The number to know is 29%, which is at the high end of what it expects to grow revenue this year. That is basically right where the company grew its top line last year. It's a little bit lower. The stock also moved a little bit lower. Overall, it was a pretty vanilla quarter. Okay, speaking of Chime, let's go to another fintech company. Brex is a company we've written a lot about at The Information. Last year, the corporate credit card company laid off a fifth of its workforce and made some big changes to its C-suite. This year, Brex has been on a bit of a rebound. The company also just locked in a license to operate across the entire European Union. And I want to bring on Art Levy, the company's chief business officer, to give us a bit of a status update on how that's all going. Art, welcome to TITV. It's great to have you.
Hey, great to be here. So excited to chat this morning.
So, Art, I want to talk about where Brex is now, where it's going. I mean, look, we reported in February that Brex was on track to hit $500 million in annualized revenue at the end of the year. And we also reported that the company expected to start generating cash by the middle of the year. It's now officially past the middle of the year. And so what can you tell us? What's the update?
Yeah, look, I can't comment on total revenue numbers right now, but what I can say is that Q2 was our best quarter ever. Our sales team hit 140% to plan, and we actually finished the quarter growing 45%, and that's both top line and gross profit. So on those metrics, we're actually tracking ahead of where, we thought we would be at this time.
And so at the start of the year, you guys thought you would grow revenue, what was it, significantly less than 45%?
No, I would say, in line of that, but I think we see it. What's the exciting thing is we're seeing it accelerate and pass that 40% marker that I know you guys had reported on previously to 45%. And,
Right.
hopefully we'll continue to accelerate past that. The reacceleration that we're seeing is super exciting, and we don't see a reason it won't actually continue to go even higher.
So let's talk about where that growth is coming from. I mean, are these new customer segments you guys are targeting? Are they new products? I mean, what is responsible for that growth right now?
Yeah, I think what we're seeing is twofold. Number one, I think the enterprise segment for us has really started to generate a ton of momentum. As I mentioned, as Pedro mentioned a few days ago, every new sales rep in enterprise in their first 90 days closed a $400K deal. So by the way, we are hiring. And I think the reason our product is resonating so much in this segment is also dovetailing nicely to the announcement we made yesterday around the global payment solution. We now have the only unified global payment product out there that has spend and card management that can be used with local cards all around the world. And so you're seeing AI leaders like Anthropic, Arm, and Cursor that use Brex as well as just larger conglomerates, companies like Toast and Zoom and Wiz.
Right. I want to talk about all the different players that are in the space. It's no secret that Ramp has just raised a ton of money. They were valued at $22.5 billion this month. Brex was valued at $12.3 billion at its peak back in 2021. How do you guys think about differentiating yourself in this very competitive market?
Yeah, look, I think obviously we saw the fundraise. Ramp, we have great respect for them. They're executing. We think it's a very large market here. We see our own traction. We see our growth at 45% and accelerating. We see where we are playing and winning, where our AI, our global, and our partnerships are really resonating. And so our view is, global payments is a $4 trillion market. There is a lot of room for a number of next gen players to be large players. Candidly, we kind of see it as like a Stripe Adyen situation.
Right. I mean, let's talk about that differentiation, though. I mean, is it branding? Is it tech? I mean, when you guys are in the boardroom, I mean, where do you think you can really stand out in this market?
Yeah, look, I think it's threefold. Number one, it's our proprietary payment infrastructure. So we have built all of our own payments, and we've done that over 7 years. We built directly into our card partner, into our network partner, MasterCard, and our banking partners, Fifth Third and Emigrant Bank. And so what we did there is become the only disruptor that can issue cards in 50 currencies. That is then dovetailing with our second moat, which is around our embedded partnerships. You saw this year that we announced deals with Navan and Zip to really be and embed inside of those leaders in the enterprise space. And then you couple that with what we believe to be an incredibly talented product and engineering team that we have that is shipping products quickly and moving very fast. Just this month, as an example, our CTO was in a hacker house for the month with a number of engineers as we're working furiously on a very exciting AI launch to come later this year.
I want to talk about the announcement you made this week that you've got your hands on a license now to operate across the European Union. Is this the first international market that Brex is operating in, or have you guys operated outside of the US for a while?
Yeah, that's a great question. So I want to clarify that today there are actually over 1,500 companies using Brex that have EU operations.
Okay.
What we announced yesterday is that now we can serve EU headquartered companies, not just US headquartered companies. And so this is super exciting because we now have the ability to bring our product to all of these EU companies that have frankly been asking us for it. It's a really big step in our view in deepening this global advantage. And we had been getting a ton of inbound from large European potential customers that want to use our product.
And so is international expansion, I mean, is that really, a core tenet of the company's expansion strategy moving forward?
Yeah, look, what I would say is we are building the holy grail of global payments, one unified card and spend management solution that you can use anywhere in the world without FX fees, with local cards, with local issuance. So to do that, you have to build deep payment infrastructure, which is what we have been doing for the last 7 years and we will do for the next 7 years. And having payment licenses is a key way to differentiate because then you can offer a better product in country.
Well, look, Art, I want to let you go, but I can't let you go without mentioning a very important point here, which is that you mentioned you put a bet out there that Happy Gilmore 2 was going to be over 90% on Rotten Tomatoes. Do you know what it's at right now? Do you know the number? I got the number for you.
My publicist says I cannot comment on this.
Okay, it's 63%, Art. It's 63%, but it's a good movie. I will say I watched it a week ago, and it's a great movie. So Happy Gilmore 3, we'll have to get you back on to make another prediction because it was a good one. That was Art Levy from Brex. Fertility support has been an increasingly popular arena for startups over the past few years, but few companies have been in the game longer than Maven. The company offers a number of telehealth services, not just for women, but also for entire families, supporting their aspirations to raise healthy children, and also for them to be healthy while they're doing that. I want to bring on the CEO of the company, Kate Ryder, to talk more about where the company is at. Kate, welcome to the show. It's great to have you.
Thanks for having me. And wow, Happy Gilmore too. I was just listening to your last interview. I'll have to go look that one up.
Did you watch it?
I mean, Happy Gilmore is like a classic in our family. So I've been living under a rock. But yeah, now I don't know, 63% on Rotten Tomatoes. It sounds okay, but we'll see.
No. It's better than
Okay,
that. It's
good.
better than that. I don't know. I laughed all. Okay. Well, look, let's talk about what Maven does. Explain it to us.
Great. Well, so Maven, you said we've been around for a while. We've been in the market for 10 years, and now we're the largest global virtual clinic in women's and family health. And so what that means is we have the largest virtual care network, the largest telemedicine network with women's and family health specialty providers, over 30 different types. And we really cover the full journey from preconception and fertility care all the way through menopause. We part of that, women's health has a lot of gaps in care, so it's not just access to providers. So as part of our product, we cover the full fertility carve out. So we offer fertility benefits as the payer. On the menopause side, we offer HRT. That's one of the big hot trends right now of women trying to get more access there. And then a lot of our core products is just giving women and families access to best-in-class providers to complement a lot of the in-person care pathways.
And so the thing that's really interesting to me about your business is that you sell to the employers. I mean, this is a benefit that employers offer their employees.
Correct. We cover about 23 million lives through our employer and health plan clients. We work with over 2,000 employers. And, I think a lot of people sometimes don't realize this, but employers are on the hook for paying for healthcare. So a lot of the healthcare inflation that has been hitting the market over the last kind of 3-4 years, in general, but really in the last 3-4 years, employers are also bearing the brunt of a lot of that.
Right. And, I just want to make sure I understand how this business model works, because I think it's kind of interesting. So you approach a company like Amazon, which is one of your customers. You approach Amazon and Amazon pays you some amount for this benefit that they're going to offer their employees. Then you take some of that and you pay part of it to the provider. You keep some. How do you make money in this? Help me understand that.
Sure. Well, on the fertility side, so we are like their health plan, right? So we have a contracted network of fertility clinics. We have, relationships with the drug companies. And so when someone's looking to go through IVF, or just look to start a family, maybe they don't want to go through IVF and they're trying to figure out, how to optimize their natural conception pathways, then we are their benefit. And so if they do need to go into a clinic, they would get a benefit ID number from Maven, and then go to one of our clinics in our preferred network. We work with the best clinics in the country, so have a narrow network to make sure that everyone's getting very high quality care that optimizes outcomes, of course. And then as they go through that journey, they then would transition, once they hopefully become pregnant, into our maternity product. And so that's really wrapping around their core experience when they're going in person to the doctor. So they get a lot of different providers that they have access to, on demand in their pocket over the weekends.
But I'm just trying to understand here. So when the employer pays you, then are they paying you per person that uses the benefit? Do you take sort of a markup on
we don't take markups on that's actually a way in which Maven's very unique in the fertility benefits industry. We don't take markups on cycles, like cycle costs. We don't take markups on drugs.
Cycle costs meaning
like the medical costs, the IVF cycle inside of a clinic.
Okay.
And so we have a very transparent pricing model where we charge per member. And then really what's unique about Maven is we're agnostic about which pathway they need to go through when they go through a fertility journey. So ideally, they just are getting a baby in their hands as quickly and as affordably as possible. In a lot of healthcare, sometimes incentives are misaligned. We don't have that issue. So for example, we don't profit off of IVF cycles. We just, if someone is a better candidate, for example, IUI, or we can prescribe them an ovulation, medication drug, and they get pregnant naturally, avoiding IVF completely, that's great. We're totally agnostic to that. Whereas some of the other models in the industry, they mark up the cost of the cycle and they mark up the cost of the drug. And so it's more profitable to create more IVF patients than not, if that makes sense.
So it's basically like the employer pays you a set amount per patient, and then depending on what the patient pursues, then that could be more or less profitable for the company, depending on what the right option is.
Exactly. I think in the wonky acronyms and terms of healthcare, it's more of a value-based model and not just that traditional fee-for-service.
Got it. Now, you guys have some new products coming out. Tell us about that.
Sure. So one of the big things that we see in the fertility space is as somebody is starting their family building journey, there's a lot of falsehoods and misconceptions that they kind of believe and see, particularly on social media. And so one of the crazy stats in the industry is that 3 out of 4 women believe falsehoods about their fertility. Another thing that people don't know is that 50% of infertility diagnoses are male factor. It's not just women, who really need to go through these IVF journeys. And so 2 of the latest product launches that we are talking about now and next week are one, a cycle tracker. And so we'll share more next week. We have a press release coming out on how that's integrated with the care model, but really that's tackling one of the core issues that when women are trying to get pregnant naturally, to really have all of the insights around cycle regularity and the optimal times per cycle to try to get pregnant. And then similarly on the male fertility side, we work with partners and we have at-home semen testing kits that, I think some of our product team, myself included, was kind of skeptical up front last year when we were testing it. Like, are people really going to use this? And do men really want to, test their semen at home? And this has been such a popular product offering and really also means that a couple can get in for testing early versus trying or having only the women go through, certain amounts of tests when she goes into a clinic to really just help people get, healthy families as quickly as possible.
And is Maven the one analyzing these tests in the background?
Yeah, we have a partnership with Fellow, and so and Fellow analyzes the tests, and then we get that data, and then we can kind of help our patients understand the right choices for them.
So, one of the big picture questions I want to ask you, and, maybe it ties into these new products you're launching, is the company was valued at $1.7 billion during your last fundraise. What is the path to become a $10 billion company? I mean, how do you get there?
Sure. Everyone in digital health asks this question, but all digital health companies in the category. But I think one of the most exciting trends, of course, to hit the healthcare industry is AI. And say what you will about it in terms of how it's going to affect society and other industries, but healthcare really needs it. And so for us, we've spent 10 years building the largest virtual clinic, and it's really been all about access. And so we've used our ability to drive access to providers and our care programming and our high-risk programs and our benefit design and fertility to really drive those outcomes.
So this is like finding better providers, basically, with using it.
Yeah, and just also like if there's worrisome symptoms, you can talk to a virtual provider immediately. And if you need to go into the ER, that's really what can drive a lot of our NICU avoidance on some of our higher-risk pregnancies. But what's really exciting now, and to your question, how to get valued as a $10 billion company, is really personalize those journeys a lot more with AI. And that's going to help drive even more outcomes and create a stickiness factor that I think everyone in digital health is looking for. Because right now, it is a really fragmented experience, no matter what type of journey you're on, whether it's in women's health or other parts of healthcare. And so, the platforms that really earn the trust of the member and deliver products that are valuable and helpful and can be that front door and to be that healthcare home for you, those are the companies that are going to be valued way more than $10 billion.
Have you guys had offers to be acquired at all?
I don't want to disclose that, but no, we're not looking to get acquired. We're looking to remain independent because there's very few companies focused on women's health in the way we are. And I think, myself, our executive team, our full team, we have a really strong point of view on what good healthcare looks like. And so we'll continue to grow.
Great. Well, look, I'm looking forward to more details on that product release next week. Thank you so much for coming on the show,
Thanks
Kate.
for having me.
That is Kate, the CEO of Maven. Okay, before we close for the weekend, I want to highlight a fun story about Jensen Huang's family dynasty that we are publishing today in our weekend magazine. The CEO of Nvidia has 2 kids, Madison and Spencer. They both work at the company now, but they haven't always been there. In fact, Madison initially went to culinary school, and my colleague Anissa Gardizy wrote a fascinating story about how this dynamic is playing out at Nvidia, and I want to bring her on to talk all about it. Anissa, welcome back to the show.
Thanks, Akash.
So how did you first hear about Jensen Huang's kids?
Yeah, it's a really good question. I think
I talk to a lot of NVIDIA employees, and this is something that they know very well. There's not an employee at NVIDIA who doesn't know Madison and Spencer work there. And I think it just has come up in casual conversations with other people who, I might mention Madison or Spencer, and people's jaws kind of drop. I don't think it's a well-known fact outside of the company that they work there.
And so give us the backstory, man. How did they end up in the family business?
Yeah. So each of them, after high school, did not really show any signs of interest in joining the family business. You're right. Madison went to the Culinary Institute of America and then studied pastries and wine in France. And then her brother Spencer studied marketing in Chicago. And then he actually moved to Taiwan to study Mandarin. And while doing that, he opened up a very popular cocktail bar in Taipei. And so they were not on the track to go to NVIDIA until around 2019, 2020, when all of a sudden they both went and got MBAs. And then right out of the MBA, started working at their father's company.
And I should say, let's just clear, who's the older sibling here?
Spencer is. He's
Spencer.
35 and Madison is 34.
35 and 34. Okay. The best buddies, I imagine, as most siblings are. Okay, so anyway, so they do their MBA, they go work at the family business. I mean, did you get a set? What is it like here to work for their dad? I mean, did you talk to Dad?
Yeah, so I sort of two things here. I think it's like, what is it like for them to work for their dad? And then what is it like for employees to work with them? I know both students across, or both kids across their whole entire lives have been viewed as very hard workers. So people that were in their MBA program said these were the types of people you would want on your group projects. And they worked really hard even through COVID when some people said, hey, I was checked out, but Madison was doing the entire group project. And so the same thing is true at NVIDIA. People say that they are working long hours, responding to emails quickly, and that they're very bright. I think there's also like this natural tension that happens with employees where they do know that Madison and Spencer probably have the most direct line to Jensen. And it's something that people don't really get out of their head. The kids definitely put a lot of pressure on themselves. And I talked to one of Madison's close friends who said that she's definitely trying to prove that she deserves to be there and doesn't want to be perceived as, being there because she's Jensen's daughter.
And did you get a sense for if she's been successful at doing that at all? I mean, what part of the team does she actually work in?
Madison has been rising through the ranks at NVIDIA extremely quickly. She's been promoted nearly every year since she started, and she's now a senior director. So she's definitely been successful. And what's interesting about both kids is that they don't work in NVIDIA's most successful business unit, which is the unit where they sell their GPUs. They actually work on strategic bets for Jensen, basically businesses that Jensen hopes one day will be big, but right now are not. So Madison works in a business called Omniverse, which oversees their 3D simulation software. And then, that could be used for maybe warehouses, cars, other industries in the future. And then Spencer sits in NVIDIA's robotics division. So he's very focused on the future of physical intelligence and where robots could go in the future.
And is this a theme at NVIDIA? I mean, are there a lot of families working at NVIDIA or people who have been at the company for years that are hiring their children or getting their children involved in the company?
Yes, there are tons of examples of second-generation NVIDIA employees. So this is not necessarily something that's too unique to Madison and Spencer. Obviously, they're the kids of the most important person at the company, but Jensen's co-founder's son works at the company. A board member's son works at the company. And Jensen has kind of joked about this with employees. He'll sort of call people out, and one joke he likes to make is that sometimes the kids perform better than the parents.
And do you think that either Madison or Spencer, I mean, do you see them as a possible C-suite executive, maybe even the CEO of the company 15 years from now?
It's a really intriguing question. And, I did talk to one of their close family friends. And years ago, before Spencer and Madison were on a track to NVIDIA, Jensen did remark once that it would be a dream if one day his kids, stepped into his shoes. But he realized at the time that might not be the case, and he was still happy with what they were doing. But I think this is something that NVIDIA employees talk about all the time: who could be the next CEO? And Jensen does not specifically have a
a second person in line that people think could step into that role. And people often say there's no one quite like Jensen. So I think now that his kids are there and they are showing signs of being very much like their father, it's definitely something on people's minds.
I mean, look, the image that it comes to my mind is just LeBron James wanting to play with his son, Bronny James, on the Lakers. I mean, this is, he was fighting tooth and nail to make that happen. It's interesting to see that playing at Nvidia as well. Anissa, thank you for coming on and telling us about that story. That was Anissa Gardizy, and that story you can find in our weekend magazine this weekend. Well, that does it for today's show. It was a busy week of earnings, but we made it through. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I'm already excited for our next show on Monday. So until next time, my friends, do me a favor, keep on smiling.